Good afternoon from Chicago. Alan Knuckman here on the floor of the CME Group, talking energy with a focus on crude oil. Crude oil backed off a bit here today. $52 was a close, down 80 cents, 1.5%. We are now trading the June contract. May is over and done, so we've shifted over. Now the volume and the activity, the front month is the June contract to focus on technically as well. For your information, we had a 10% bounce in the May contract, before today obviously, since those March lows. So the trend remains rather bullish over this last couple weeks with this healthy bounce back. Contributing to this upward move has been the dollar decline. The dollar index is down underneath 100 once again, which is significant psychologically. And you want to also be aware that volatility is coming out of the market with the VIX moving lower. So you're seeing the dollar moving down, helping out a lot of commodities, and especially crude oil that's priced in dollars. So there are less geopolitical concerns right now for these last couple of days anyways, a bit of relaxation after the holiday. Focusing on the dollar, January 3rd was this recent high up around the 104 level. So we've seen a steady decline when our concern in the past had been that we're going to continue to raise rates, which would strengthen the dollar, which would hurt crude. That hasn't happened yet. So let's be aware of that situation. Also today we came out with EIA data. It was potentially bullish because there was a decline of 1 million barrels, but it was interesting to see how the market reacted. And traders paused after the number, and when it didn't bounce, we saw some profit taking and some unwinding, not based on the actual fundamentals, but how the market reacted. And when we didn't see something that potentially should have been bullish add fuel to the market, you saw a bit of unwinding and some profit taking on the day. So we saw some selling. We're back down to the support level. Now, we had a $6 run here in the last couple of weeks, so $51 is an important midpoint level of this last rally basis the June contract, and then $50 down below is very important psychologically. In the bigger picture, well, we've been trading between 52 and 54, kind of going nowhere, topping, I wouldn't say topping out, but slowing the ascent in crude oil over the last 10 days. So now we're back down to that 52 support that we want to keep an eye on. So to summarize, crude was off a bit today when it could have been bullish and seen a bounce, but it did not because gasoline stocks were a little bit of a surprise increase in the EIA number. But be aware that crude is not over. The trend is still strong in crude, gold, and stocks. People have been trying to pick this top. This asset rally continues. So watch the markets on a weekly basis. Keep an eye on crude, 52 and $50 on a weekly basis to look at the big picture. Alan Knuckman here at the CME Group, talking energy.